Hello Wolfpack, quite honestly, there is a lot to talk about to the point where there's too much to talk about today, so I'm going to narrow it down a little bit. A few key main things I want to get into, okay, and one of those main things being Ethereum. Now, Ethereum had the merge, okay, the merge happened yesterday. We said yesterday, we made a post on YouTube and on Twitter, it is likely to see a drop, and said in yesterday's video, very likely. In fact, we said it was basically impossible to see a pump on the merge. And yes, of course, we've seen a drop on the merge. We dropped below that triangle formation as expected. Why did we do that? Well, the logic behind it is this, and it applies to everything in terms of news events, more than just Ethereum. The point being is that, you know, when you have an event that's hyped up for so long, this thing was being hyped up since June, right? You generally see it get priced in. People buy leading up to the event. They want to get prepared for it, and so it gets priced in. And essentially, yesterday, we're at a point, and this is the exact quote that I said yesterday, we're at a point in which a successful merge would lead to nothing happening, because the merge is already priced in. And so, you know, we saw the merge. I don't know if it was successful. I don't know if it was unsuccessful. I assume it wasn't completely unsuccessful. But the point is, there was nothing we could have done from there. We're not going to go up because it's already priced in. The merge is already priced in. We're not going to go up. And so what happened was, essentially, people were expecting it to pump on the merge. Everyone who bought, you know, in this 134% gain over the last 3 months. Everyone who bought was expecting a pump on the merge, otherwise they wouldn't have bought, right? That's what I'm assuming, at least most of them were, of course. And so when they saw there was no pump, they were like, oh, okay, well, I guess that was a waste of time, and they started selling, right? That's what happens. It's like, even when something doesn't go wrong with the event, and I don't think anything particularly went wrong with the Ethereum merge, you still see sell-offs because everything's priced in, and then people expect a pump and nothing happens, so they just sell because they're like, oh, well, that was a waste of time, right? So we saw a dump, we dropped below that line, that triangle structure is no longer valid. We can delete that line, it's broken down. In fact, we'll leave it there for a few more days because we might come back up and retest it. But essentially what's happening now on Ethereum, if we invert the chart, is we're seeing it's not necessarily a cup and handle formation, but it certainly looks like one, right? One big cup, one smaller cup. The neckline is sitting there. Flip it back over at 1,417. So if we lose that line at 1,417, we can expect a measured move drop, right? We're measuring the move right now from the top of the cup to that neckline. We can expect a measured move drop down to that 900 region. In fact, we will be retesting perfectly, and this stuff doesn't happen by coincidence, by the way. We will be retesting perfectly the double bottom formation that we saw. Sorry, we'll be retesting the low we found in June as per the targeted breakdown there. That's very interesting. So essentially, we've got an inverted cup and handle formation on Ethereum. We broke down from the merge, and the inverted cup and handle formation we're looking at, that we've identified here, that's starting to play out, targets a retest of the June low. Okay, so not looking too good for Ethereum there. It looks like we're going to be retesting that low. Moving over to something like the S&P500, and this is a fractal we've looked at occasionally over the course of the last 6 or 7 months. Now, we haven't looked at it for about 2 months, and I actually completely forgot about it until the other day, and I was like, oh, okay, let me try and see if this works now. And we can see that, you know, this thing is still playing out, right? It's still playing out very, very well. And in fact, it's playing out almost perfectly. And so fractals, they're generally very unreliable. I don't like fractals. I don't think fractals, the chances of a fractal playing out 100% of the way, all the way perfectly is very, very low. But the point is, this thing's undeniably valid, right? You can't say that this fractal isn't valid because look how perfectly it's played out so far. And so, at the very least, we can expect it to play out a little bit more, okay? And even if it stops playing out, even if we pump right now or dump right now, and we invalidate the fractal, that fractal is still very helpful, because look at it. It completely predicted this entire move. And so, this fractal suggests, for example, that we come down, we bottom out late September, we have a little pump up until October, and then we drop down massively. And guess what? The fractal ends at the start of December, or the end of November, depending on how you draw it. And guess what? I think Bitcoin and cryptocurrency and the market's going to bottom out in Q4. And I think, as I said before, that's going to happen before December. So the end of November makes sense. Now, do I think this fractal will actually play out like this? No, I don't think the S&P 500 is going to 2,400. I just don't think that's possible. I think that's overly bearish. Again, it is a fractal. This doesn't mean it's my prediction. It's literally just an observation. I've just pulled out a data point. And where did I get this from? Well, if you go all the way back to 2008, that's exactly where I got it from. You can see, just looking at that, that's very similar to the structure we have now. Again, I don't think we're going to have that massive capitulation like at the end here. I think we'll just bottom out somewhere up here in the mid to low 3,000 level, probably the low 3,000 level. I don't think we're going down to 2,300. I simply just don't think that's possible without some major event like an invasion or something. And even with that, it's like, well, look what happened when Russia invaded Ukraine. We didn't see anything near that level of magnitude of drop. So I don't know. I don't think that's possible to go that low, but it is interesting nevertheless, right? Because the fractal, I mean, it remains valid, and it does suggest we go a little bit lower, at least a little bit lower, at least to that low 3,000 level. So let's see what happens there. I mean, you know, and then just that fractal aside, and this is the regular S&P chart. I promise we'll get into Bitcoin in a second. The fractal aside, which is obviously pointing downwards, and looking for a bottom in late November. You know, that aside, what we've got is essentially a triangle formation on the S&P 500 lasting from January 2022, the bottom line of it forming from June, and we've actually broken that uptrending line to the downside now, and so we're in free fall, and the next support level is another, you know, what is it? Another like 2 or 3% drop away, and then below that we've got the lows in June, which are just a 6 or 7% drop away. So, look. The S&P is breaking down. It doesn't look good. Ethereum looks terrible due to the merge. I mean, it's broke down massively. And Ethereum, by the way, is still extremely overvalued. Because if we actually go to the chart and we look at the price, for example, the gain between here and the bottom in June, we're still up 63% from the bottom to June. If you look at Bitcoin's gain from bottom to June, you know, Ethereum's up 63%. Bitcoin's only up 12%. So Ethereum is up an additional 50%, over Bitcoin. The thing is overvalued. So if you're like buying Ethereum right now, I just tell you to just honestly just look at the charts. I think you're just not looking, right? Because if you're looking at that and you're thinking this is bullish, you know, I don't know what to say to you. That's not bullish. I mean, we're clearly overvalued in relation to Bitcoin. Yeah, you could argue, well, the fundamentals have been bolstered. Yeah, but is that really a reason for it to go up 50% more than Bitcoin? No, not really, especially when you're forming an inverted head and shoulder, inverted cup and handle formation after a breakdown. It just doesn't look good, in my opinion. And you know, that's just my opinion, though. You guys can disagree with me if you want. I think it's overvalued. I think it will go down further. That's my opinion with the vague general market. But I have been very clear to you guys, right? I have been saying recently that I'm very much a believer of the fact that the bottom is much sooner than people think it will be. You know, I've said before December, which is less than 3 months, 2.5 months, before December we'll see the bottom. And I've said that bottom will likely be, I think it will likely be at like 17.5k. Yeah, we could go down further to one of these two levels, 13 or 11, but I think 17.5 makes a lot of sense. We've got the 3-hour week there, we've got the double bottom formation there. We generally double bottom formation in a bear market. That's generally how we see the bottom, right? And also we're forming some bullish divergences on the daily, for example. You know, for example, this candle close here from June was higher than this candle close here in September, and we're seeing, we're seeing that start to play out. You know, we're seeing a hidden bullish divergence there and an uptrending support line for the RSI at the same time. And then even on the shorter time frame, right? Shorter time frame RSI, it's like, well, look at here. August 28th, we had a higher bottom than we had on September 6th, and we had a lower bottom on the RSI just slightly. So that's another hidden divergence there. So 2 hidden bullish divergences on the RSI on different time frames there. Not different time frames, but different time scales, I should say, on a daily chart. And, you know, going down to the shorter term, yeah, I think we'll break down in the shorter term, but just in the meantime, it's like, well, why are we holding this region? The reason is because we've got major support from a 2017 all-time high at 19.5k, and we're also holding this triangle that we formed. We can see we had a lot of lows there at 19.5k. 19.5k is a pretty considerable support zone. If we lose that, we don't really have too much, right? We're going to be basically going down to 17.5k, essentially. That's what happens. So, look, FMOC in 5 days as well. The market is trying to price in a 75 basis point hike, so it'd be no surprise to me if we go further down before that happens. And that's generally all we've got for Bitcoin. 4-year cycle theory is still intact. It's still playing out quite well. Still predicting Q4 bottom, and I've narrowed it down. So the 4-year cycle itself predicts a bottom between October and December. I've narrowed that down to October to November. And I've done that using various methods that I've gone over multiple times in previous videos. Mainly, the method is this, okay? Assuming the lowest price Bitcoin goes is 11.5k, which is my assumption. I'm not going to get into that now. It's going to take too long. I've done it multiple times in the past. That is the lowest price I think Bitcoin can go, 11.5k. Assuming that happens, this downtrending macro line will meet 11.5k at the end of November, meaning we will have to break upwards, assuming it's the lowest price it can go. So therefore, the bottom will be before late November at the latest. It could actually be, if we hold 17.5k, it could be as early as mid to late October. You know, do I think that will happen? Look, I think it's more likely than not. I said previously, I think there's about a 75% chance we hold 17.5k and a 25% chance we go down lower. Look, my opinion on that might change as we approach it. If we get there within the next 2 or 3 days and we've still got the FOMC decision, etc., and it's still like September, look, I might say we go down further. But as of right now, I genuinely do think 17.5k has a considerable chance of holding. Look, that's not to say we won't wick below it. We definitely can and probably will wick below it. That's what you see on bottoms. I mean, if we go back to May to July 2021, May to July 2021, for example, what do we see? Well, we saw, many sharp wicks. We ultimately held the level. We ultimately held the 29.7k level, but we saw many sharp wicks below it. And in fact, the level we actually needed to hold here was 30.16k, but we actually dropped down below for just a couple of days and then came back up. So look, it's very typical of bottoms, and you can go back to previous bear markets as well. I don't need to. I can just say it because you guys trust me enough. I'm telling the truth here. When you see bottoms at horizontal price levels like we would expect at 17.5k, it is very common for you to see long 5 to 10% wicks to a downside below that. So when I say we bottom at 17.5k, I mean that we bottom on the closes at 17.5k. I can't predict what happens in a very volatile candle wick. That's just out of my control. Volatile candle wicks below that could definitely reach for 16k levels for sure. But I think 17.5k is likely to be the bottom. But so essentially, that's my opinion on Bitcoin. Look, and I don't want to get to repeating myself too much. I'm going to be mixing up the videos soon, but I think there is a lot to talk about. And I do get a lot of new viewers every video, and I think it's very important that people understand what exactly is going on, because a lot of people they fall into the trap of being like, oh, I'm just going to DCA. And I think DCAing, when you have the time, when you have the means, if you're spending this much time watching a video on YouTube, you probably have time to do a little bit more than DCA. I think DCAing should be reserved to people who genuinely don't have time. And if you've watched 12 minutes of this video so far, the chances are you have a little bit of time. You can learn a little bit more and you can be a little bit more comprehensive than just DCAing. 4-year cycle trends still playing out well. If we were to bottom at 17.5k, and this is something I'll go into in an exclusive video in a few days, if we were to bottom out at 17.5k, according to my macro analysis, according to my date range trend, according to my price trends, if we were to bottom out 17.5k, we would see a 244k top in 2025. But I'll get into that in the future. I did a video on that maybe 2 months ago. I think it deserves a little bit of a refresher. I do have some data to change there, and I will mix it up a little bit. So thanks for watching, guys. Cheers. If you go to my YouTube channel homepage and click on the join button, you can see the rewards that VIP members gain access to. They get 4 trading setups per week, prioritized reply to comments by myself, trading psychology, a lecture, so a 2-hour lecture on trading psychology, and then exclusive Telegram group access where we can discuss the charts and discuss the active trades from the exclusive trading setup. So if you're interested in that, that's 40 AUD a month, which works out to be, as of September, around 28 USD a month, less than $1 a day. Go ahead and sign up to that. Moving forward further, we have the BitGet Exchange, and this is a very important one. The BitGet Exchange is something that I hold very closely as a trader. Why is that? Well, because I spent about a year looking for a good exchange. I got pretty much scammed on Binance last year during the bull market in 2021, and I found BitGet. They reached out to me, and then I reached out to them for the partnership. They got 0 trading fees on spot pairs, so it's free, entirely free for spot, and then on futures, they've got about 4 times less the fees than Binance, 4 times lower fees than Binance. And Binance is known to be the most popular exchange with the lowest fees. So this exchange is extremely cheap. On top of that, it's non-KYC, which holds true to the values of cryptocurrency, right? It's decentralized in your personal land. You don't need to link your identity to it if you don't want to. And it's globally available on that non-KYC format. So sign up to BitGet using my referral link in the description below. And in doing that, you'll gain access to over 4,000 USD in rewards by completing a few tasks. So again, use my referral link and sign up. It supports the channel and it supports your own trading endeavors. And then further, we've got the Crypto Academy, and this is if you want to learn how to trade, you want to learn how to do TA, you want to learn how to analyze a market, and that's where the Become a Trader 10-unit course comes in handy. Now, this course, and you can go to our website, you can read the abstract here, but this course was developed by myself and Megawell Crypto. We made this course during the start of 2022 and released it in around May 2022. We analyzed basically dozens of different courses, technical analysis courses that are available on the market. We analyze what was wrong with them, we analyze what was right with them, and we analyze things we can put together. We've created this so that we've got slideshows, we've got videos, we've got worksheets, which is no other course has that, by the way, all of which is kind of aimed to kind of direct towards any kind of learning style, whether it be verbal, whether it be visual, whether it be practical, any kind of learner you are, you can, profit from this course in terms of knowledge and then move it into the market and actually profit financially. So if you're interested in this course, you can go to our website, read out the 10 units, whatever, read everything you want, and then chuck us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information. Thanks for watching the video, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.